So, I'm streaming. I'm also going to start recording for a YouTube upload. The market is currently dropping, so I'm just going to go to a heat map here of the S&P 500. Finished the day in the green. Everything went well. The investments that I currently am holding here, Apple, AMD, Walmart, and Roku, I sold Visa today because their dividend, ex-dividend, it was tomorrow, and I don't want to take that drop. So my account is at 39,582 as we speak. If the market stays low like it is, let me go into, let's see if there's any Asia news coming out here. I'm going to go to the ES, and I'm going to show you on a year chart here. Here we are.
As the death toll in the hard-hit province jumps, the Japanese yen is getting well bid and is rising.
That's it.
Aussie dollar and the offshore Chinese yuan
Coronavirus.
slipping.
I called that mess. Should have took profits. Going to take a hit.
The casino operator pulling its
Oh well.
2020 guidance as it assesses the impact of the COVID-19 outbreak. But Singapore's DBS Group holding firm to its pre-virus outlook for this year as it reports
Well,
quarter earnings that beat the street.
see that? That's tomorrow's candle right there.
Right, so it was supposed to be a relatively constructive session given the incremental new highs that we saw on Wall Street overnight, but clearly it was a case of the markets lulling themselves into a false sense of security. We did see in the last few minutes official numbers from Hubei province announce a spike in the number of confirmed cases and a spike in the number of fatalities as well. And as we speak, the Nikkei 225 turning slightly negative, 23,863. The Kospi, though, still looking reasonably constructive, but surely there's a clear downside bias here. 2,245, and the S&P ASX 200, the benchmark in Sydney, which has been open for about an hour, hanging on in there, up by 0.3%, 7,112. The impact, though, and the risk aversion is being felt very acutely in the currency space. Let's take a look at the Aussie dollar, which is a key barometer of risk. Aussie dollar down by almost 25 basis points early Asia, and US futures are also extending their slide, and E-mini stock futures, latest here, extending their
That's
fall,
this right here.
as far as 0.5% after that reported jump in coronavirus cases. Now, let's just bring you up to speed with what we have learnt here. The Chinese province of Hubei reporting the latest tally of people affected by COVID-19. Let's head out to Sherry Kang in Hong Kong, who's got the latest here. Stunning spike in confirmed cases and fatalities, Sherry.
Oh man, come on.
That's right, and as you were, laying out the big picture there, a lot of, risk assets could see some wobbly session at least to
Well, that's not cool.
Thursday. And we did hear from the chief of the World Health Organization just overnight, calling for extreme caution, saying that, before the latest numbers that we got this morning from Hubei province in terms of the new cases of death and infection, he did say that cases in China might be stabilizing. That's as of yesterday. But the outbreak could go in any direction, and I think that's exactly what we are seeing, an example of that. In the meantime, we do see a lot of economic activities and many other activities being sort of disrupted and frozen, delayed, or moved around in Asia. Yet another example of that is, of course, Hong Kong 7, so reportedly being delayed by 6 months. This is according to the South China Morning Post at this point. We are expecting the World Rugby Organization to come out and make that official statement. It was supposed to be happening early April from the 3rd and 5th, but that has been reportedly delayed for 6 months because of the coronavirus outbreak. And this comes as Hong Kong has confirmed 50 cases of coronavirus infection so far and 1 death as well. Because we continue to see that disruption of economic activities, Moody's, for one, is talking about how that's going to be a credit negative for banks, their asset quality as well as profitability. And it's not just the banks we're talking about. Hong Kong's property sector, retail sectors will get a hit from that. It's not just the Hong Kong sevens here in Hong Kong. Remember, Art Basel was canceled as well. So a lot of activities here in Hong Kong getting that impact negatively. And we do see some of the property companies in Hong Kong trying to provide some relief to the retail tenants. For example, Sun and Kai Properties here in Hong Kong, which is, Hong Kong's the largest property developer by value, providing some relief measures for commercial tenants at shopping malls. They're not getting a lot of shoppers these days, so they are reducing the February rent by up to 50% for most of its tenants. And a lot of companies are actually coming out with a similar measures, perhaps not to the level of providing that 50% discount. So we'll be watching this particular space as well as we are discussing that sharp rise in the confirmed number of cases as well as death in the epicenter of coronavirus outbreak. Guys?
Sherry, thank you very much indeed for that. Now, the Aussie dollar plunging after Hubei reports a sharp rise in the number of cases and deaths this morning after adopting new methodology. Let's bring in Will Morris for an update on all the movers in Sydney. Will, good morning.
That's that. So the coronavirus news is not looking good. Let me go ahead and adjust my screen here. Go over some charts, but tomorrow's going to be a wash. I wouldn't really do any swing trading tomorrow. DLEE, are you on? Hey, what's up? I got JWR on here. I'm about to go over some stuff here. I just had up the CNBC news, and it was just going over the basic information. Yeah, it's pulling back. Yeah, I wouldn't say it's bouncing. Not if you look on a brick chart. Let me go ahead and adjust my stuff here. Yep. Yeah, check this out. Delee, are you on my are you watching this Twitch here? If I got some people on here, I'll play this video in a minute, see what people think. So CNBC Asia has the best information right now.
Security. This is an evolving virus. Many of us, even the public health experts at the apex body of the World Health Organization, haven't really got a handle on. This is going to be a new driver of uncertainty and volatility, is it?
Well, potentially. I mean, I think what we forget is, we've started a pullback in the middle of January. Markets are very toppy by mid-Jan, and everyone's getting quite excited about markets.
All right.
We saw.
I'm about to play the conspiracy side of it. Here we go. So let me pull this guy out, and here it is.
There are strange facts surrounding the coronavirus outbreak of 2020. In 2018, the Purebright Institute was granted a patent for the coronavirus.
The Purebright Institute is funded by the Bill and Melinda Gates Foundation. On October 18th of 2019, the Bill and Melinda Gates Foundation, along with Johns Hopkins and the World Economic Forum, hosted Event 201, a high-level pandemic simulation in New York City. The simulation, which was held just 3 months ago, was based on the coronavirus. They concluded that it could kill 65 million people and decided the solution was to have a vaccine within months of an epidemic. The same week that the coronavirus makes headlines, Netflix releases the docu-series Pandemic: How to Prevent an Outbreak, wherein the solution is vaccines and the trusted hero is Bill Gates. Meanwhile, the Bill and Melinda Gates Foundation fund Innovio Pharmaceuticals Inc. to develop a coronavirus vaccine. It's weird, right? Or am I just a conspiracy theorist? What about this?
This is a good part right here.
5G, an emerging technology upgrade that has many countries concerned about its impact on human health. Experts from all over the world warn of the dangers of 5G. In 2018, it was reported locally that Wuhan would be the testbed city for full 5G network operation in China.
What?
The article went on to say that it would be fully operational by 2020. And on Halloween of 2019, they turned it on. Scientists warn that 5G causes flu-like symptoms. Interesting? What is also interesting is that when trying to share the link of 5G being launched in Wuhan, Facebook blocks you from doing so.
No.
It violates their community guidelines.
That part I don't know about. The whole Facebook thing, but that's some pretty trippy stuff. Bill Gates, man. Create the problem, create the solution. Cha-ching. I don't know. So anyways, looks like my Apple's going to take a hit tomorrow. I should have just sold everything at the end of the day. But Apple, I was up 64, AMD down 86, Walmart 26, Roku down 57. These all were just going to be swing trades that I planned on profiting on here coming up pretty soon, but it's going to throw me for a loop. Ended the day at 39,606. I sold Visa today. Let's go into some charts here. So first let's look at Visa. Tomorrow is their dividend, ex-dividend, so typically there'll be a sell-off. Usually the buy-in would be today, the sell-off will be tomorrow. And then if it can hold, if it's a light sell-off and it can hold above this line here, I believe it would end up doing a rally, but not with this coronavirus news. I believe it's going to throw everything for a loop. So overall on the heat map of the S&P 500, first let's look at the S&P 100. Overall everything did good, but healthcare was sketchy. Consumer staples didn't do too hot, but information and technology, communication did good. S&P 500, and we're seeing the same thing here. Russell, NASDAQ, Dow Jones, okay. And let's go back to some charts. I'm going to take a look at Apple. So Apple, I was hoping to start climbing again, but I believe everything's going to get stuck in a bit of a rut here until Bill Gates saves us. So we got AMD. Ooh, yeah. We got Roku. Man, Roku's been fun too. Let's look at the 3-year. Look at that nice wedge. Actually, there's a new line that needs to be drawn, eh? Let's do one zoom. Get that one in. Let's go ahead and change the color on this guy. Let's darken him up. Alright, and then we got one more line I want to put up in here. Nope, we don't need that one yet. Alright, let's go in back here to a year. And man, Walmart. So Walmart's just been climbing the line. I'll walk the line. They got a earnings report coming up. I really don't see any reason for them to be dragging like this. We'll see how the earnings report is. It should be good. That one should hopefully keep me afloat. I wish I caught a short on this guy. Let me go ahead and take a look now at the ES. We're going to go back into charts. And I can answer some questions here if anybody's got anything. Alright. So let's get back into the year. And I'm going to have to write in some new notes. Virus news. We all know what that means for a while, right? Virus news, help. Let's keep it like that. Come on, come on. Oh well, that's good enough there. So that's that. So let's look back throughout the year so far. We got negative trade deal news with China. We got the Iran attack on U.S. forces. We got the coronavirus that finally broke us through our overall support line. We were able to bounce back on my T here. That was when the market rally at the end of the day could be due to the earnings report of Amazon kicking the market back up above my support line. Then we dropped again back down, and that was due to coronavirus and Trump impeachment that was going on. That's really the only thing I could find that caused that. And we rallied up. We finally hit a new all-time high, breaking this here old all-time high. And now, if this virus news brought us down back to my trend line here, I'd be worried about it, but that wick it's already got there, I'm feeling pretty good about. I'll definitely be waking up at 5 o'clock in the morning to check this candle and make a decision on what I'm going to do with my blue chips, and if I will be jumping on my futures account all day tomorrow to short the market. And basically the best way to do that is just keep the news up, and what you want to do is go into like a 133 tick chart. That way you don't have to pay as much attention to your volume, or a 512 if you're watching the market when it's about to open. So I'm gonna move this virus news to right, let's see, we'll move it in about right here. Actually, I bet we reached an all-time high here, and I think this would have been a sell-off. Then we got to bounce back, and then this would have been when the virus news came back at us. Lee, you're out and about, huh? Oh well, I'll catch you another time, brother. So that's that. Also, Renko charts are really good to use when we got news that could cause the market to crash when the opening bell hits. And if you just start seeing these blocks just start crumbling down red with these little bounce flag backs like this, reversed flag. You just get in on those. Once you see them a few times and the market keeps dropping, you just jump in after you see a spike of green. But depending on how big your account is, you may want to do the micro E-mini futures, where each tick will give you $1.50. If you do one contract in the E-mini futures, it's $12.50 you'll gain as it drops per tick per each one of these. So this would be, with one contract, $12.50 per block here. So some people trade like 6 contracts right here down to here, and there's your house payment. But that's that. If anybody wants to ask for a specific company they want me to take a look at with them, I can do that right now. If not, I'm just going to go through my watch list that I'll be looking at for tomorrow. So I'll just wait a sec here. Drink a beer. Well, pork belly, ATVI. Sweet. Let's take a look. I'm going to move my cameras back. And let's see, ATVI. Hey, look at that big old V. That's the V. Everybody knows what to do when they see a giant V on a Renko chart, right? No, I'm just kidding. All right, so let's take a look at the year. I'm going to fix it. And look at that. Activision too. I like Activision Blizzard. They struggled when they jumped into the Chinese market, right? They made some bad decisions. My little brother is a gamer, big time gamer. I used to be a big time gamer too. Team Fortress Classic, Counter-Strike 1.6, shout out. But he's still a big time gamer. And he told me a lot of news. Activision overall, I believe, is going to just continue to get bigger and bigger now that they're in the Chinese market and they're starting to make better decisions. But their what would it be? Not their HR department. Somebody, he was telling me all these stories. I can't even think of it right now, but just mistakes they've been making lately. But overall, this would have been a good spot to jump in, right? Pork belly, So let's zoom back and let's take a look at a 3-year. All right. So this must have been that bad decision making that they made. Man, I'll have to put him on a guest spot, and he can talk all about Activision. But I think I'll definitely add Activision just to an overall watch list. I might start paying more attention to them. Let's see. I'm gonna add them to just my basic watch list here. But I personally wouldn't touch them right now. There's really no. Let me go into some chart. Just simple bullish patterns here that everybody should look for on the year chart. Okay, now this is the style of investing or swing trading that I do. So what I look for is, as a swing trader, I look for overall investment movement. Okay, so obviously we got a good investment movement here overall. It's back here after this drop, about right here would have been a perfect time to get in due to an ascending scallop. Now right here, what we're looking at is 3 rising valleys. Okay, so we had, this would be considered 1, 2, 3. I use this line would be 2, and I would have had this line out here. If I would have caught it, that would have been 3, and I would have been in it to win it. So that's really what I got with ATVI right now. But definitely, if you jumped in them right now at the top here, took all the damage from the coronavirus and then just stayed in it, you'll be good in the long run. But yeah, not right now. So coming up, right before this dividend, that's the next time I'm going to be jumping on to look at them. So 414, I'll start paying them more attention. I'll look at their pattern, and I'll see if it's something I want to get into. But that's that. Let me see. Somebody else said something on here. How do you decide on which stocks you enter, entry, and exit points? So JWR24, it's simple, man. It's really as a intraday trader, you're gonna want to watch what I'm doing and take what I would consider a scalp off of a swing trade. It would be an intraday trade. I'm taking scalps off of an investor. So I ride the waves of an investor as a swing trader, and as an intraday trader, you ride the waves of a swing trader. As a scalper, you ride the waves of a intraday trader. And that's kind of how everybody makes money in the market if everybody's doing it right. Everybody's jumping in with the wolves, the best versus the worst, I guess you could call it. But we're all riding each other's waves too. We all need each other. So that's really the best way to think of it. This is the best way to overall trade with my strategy, but there's so many cool ways to trade. I'm in no way the best, I'm in no way anything special, but this account I started just to help people out. It's a $30,000 account, and I'm just going to go with it throughout the whole year. It's at $39,595 right now. It's obviously taking a hit from this coronavirus news, but this you always want to watch the S&P 500, but you don't want to watch the S&P 500 with the gap up and gap downs. You want to watch the futures market, because as you can see right now, this candle right here is tomorrow's candle. So when the market opens at 9:30, wherever we're at, if it's down here or if it reverses and it becomes a green candle and is up here, you'll either gap up or gap down. And the majority of your S&P 500, now that's what I typically trade, is the S&P 500. So I'm trading stocks in here. Now today, nobody should have been trading in healthcare. That's why you got to use a heat map. That's why I use a heat map. If people were like, I don't know why I'm losing money, and they were trading, Johnson and Johnson and all these other stocks that I don't even know who they are because I don't trade them. But for instance, utilities was on fire during the coronavirus first drop. So during these 2 days here, utilities was on fire for some odd reason, and then of course you could have been shorting this market right here, the E-mini. Now all the E-mini is the futures market. The futures market was really expensive, so they made an E-mini futures market. You literally make $12.50 per tick. Per 25-cent movement is a tick. A point is a dollar movement, and that is right here is the depth of the market, level 2. So literally there's 8 people waiting in line, you could say, 61 in line, 85 in line. It's the most liquid market. So I and a lot of futures traders use this depth of the market. It's not as important in trading your stocks, because you'll just see numbers scattered randomly. But there's so many people that trade this market that you can literally see huge numbers appear right here and know that the market is going to be dropping down to that level, so you can get in trades. But right now the numbers are fairly high for 7:29 p.m. Eastern time. At around 8:30, 9 o'clock is when Japan Okinawa, the Chinese, Korea, the Asian markets jump on and trade our market and their own. So you'll start seeing this move a little bit more. You'll see volume increase, and then when the United Kingdom and the European market opens up, people will over there, however they do it through brokers, trade this market as well, or their market moves this market because people in the United States are trading this. I could trade this right now if I wanted to, at any time. It's open like 23/7. It does shut down for a little bit, but it's for the most part open all the time. You always want to look at this, and it's going to allow you to judge how you want to invest in your blue chip stocks. So obviously tomorrow, if you will wake up in the morning and it's a red candle like it is, everything's going to gap down. And then what you want to do is you want to watch the market here, and you want to see if when the market opens, people start buying back in because they're not worried about the coronavirus, or people want to just do a sell-off. So if tomorrow the market just starts dropping and we start heading towards this now support zone, I would look at this for my time to scalp and jump back in a little buy spot, or look at a time to then maybe buy back in, or this is when you're going to really pay attention. If it drops below this zone, we could be heading into another one of these guys, right? Now this right here, if we start heading to something like this, you want to have a futures account and you want to short, or you want to be a person shorting the overall S&P 500. Pick a stock, what everyone takes the hit the hardest, because they're affected by Apple is probably, unfortunately, I hate to say it because I'm holding Apple right now, but I'm only up $44 right now. I was up a lot more than that before this news hit. I was getting close to 40,000, but it's all good. It's not the end of the world. We know what's going on in the market. So PT, let's see, we got something else here to look at. PTO, looks let's see. Now why are the candles so big here? Is it, it's a new stock, huh? Peloton Interactive Incorporated. So what do you know about this? Pork Belly, what do you know about this company? Let's see here. Peloton Interactive option. Earnings looked fit. Here's why. Twitter takes flight. Peloton's stuck in various cycle. Oh yeah, they make the with the interactive bikes. I got a friend who works on base that was telling me about them. Okay. They make the fancy bikes. That's cool. So obviously everybody knows that the workout equipment comes in phases. They never last forever. Now, if this company's innovative and they continue to design new pieces of equipment, and they maybe even get into a new sector with their money, they could continue to climb. But I wouldn't expect this to become, a $1,000 stock one day or anything like that. And if it does, I mean, I'll be regretting what I'm saying right now. But obviously we see a nice line to draw right here, right? So it just going off of technicals, that would have been my first one right there, which we just dropped below. Okay, so that would be taking this and this. This respected it, so definitely I want to keep this line because we got the respect here. The market's all about respect, okay? The main reason I keep a blank canvas and I don't use all these studies that I actually have designed and coded is just simply because I like to look at it, you know, blank canvas and draw it out myself. So let me go back to the study. I'm going to remove this study here. Trend lines. So overall trend down, medium trend up, last trend down. That's right where my line's drawn. That's why we got all these lines resistances here. We're just going to remove all studies, blank canvas. We got that line there. Next line I would say would be, I mean, that's pretty much it. I'd stay away. Just like you said, Pork Belly, just got earnings and potential to drop more, I guess. I think your gut feeling on news and you saying that, it's probably right. If you get back up above this line here, I'd watch a few days of movement and see what it's going to do. But, yeah, I mean, nothing I even would want to really add to a watch list right now. It's not a company I feel like has a lot of potential. I mean, maybe they can make themselves up to a $50 stock, and, you know, maybe they'll get bought out, honestly. That's probably what's going to happen. That's what I would do if I made the company to this, made it a public, you know, a public traded company, and I was a piece of workout equipment. I'd try and get bought out by Apple. I don't know. I'm just kidding. Let's see here. Let's go to my flex grid. So I've been watching Intel, LW, Nike, AutoZone. Okay, so Nike did really good. Let me go to Nike. And this is as simple as it can be. JWR24. Let's take a look at Nike. And you'll see my Roku position. I'll show you here in a minute. I've been in and out of Roku like crazy, though. I like trading Roku. So here's 3 years, okay? So we got in 3 years overall a nice uptrend. Let's back out to 20 years. Okay, 20 years, look at that. Let's go into 10 years, nice. 5 years, nice. And then now let's get into the year, okay? So this line right here, you should have got in here, kind of like Walmart, right? Boom, you would have just got that. So let's go back to Walmart, okay? Right here. Now's still the time to get into Walmart, okay? I bought here, took profit here, bought here. Maybe I'll just let it ride now, okay? I'll go back to Roku to answer your question. So Roku, right here at this line, right here, I took profit and I kept, I got $2,780 worth of Roku right now. So I actually got, let's see, back at the chart, my entry was, let's see, $139.33, and I took a $40 profit today. I'm down total 58. But honestly, I'm probably just going to stay in Roku, feel the pain. They got an earnings report coming up that should be good. And they got this overall, if you want to look at a 3-year chart, let's go back and look at a 5-year, okay, 3-year chart. They've been out that long, you know, roughly. So they just came up here and they did this nice flag here, which a lot of companies did. Due to just overall Donald Trump election, and since Donald Trump is the president, I think Amazon would be a good, you know, this did a nice wedge. Amazon did a huge cup and handle. You see it, went up, cup and handle. I called that one. Disney, I believe, did a what's Disney? Is it DIS? Right. Yeah, Walt Disney. So Disney, if you look at like a 5-year chart, it should have done the same thing. Yeah, it just kind of went up and did the sideways move. That gap up was due to announcing their streaming. Then it sideways up until this point, and then the streaming service came out. That's what was my last take profit zone. It was here to here. So that's kind of how you play blue chips. You look at the year charts and just the big overall movements. Let me go back. So AutoZone should be another one to watch right now. It's right in the line of a support. So I'm going to go over to AutoZone, AZO. Here's AutoZone, and it's right in the line of support. We can go back. Let's go back to a 5-year chart. And there you see it. Bottom, respecting it. Launched out away, retested, but said we're way too strong on something. Rose up, stayed above. You could create a new line here. And if you created a new line here, you will see how the market respected it, because when it dropped below it, you see, gap down below it and took it. But then it hesitated, even though it wanted to run and wanted to say, hey, we got a new line here. We want to drop. But then it said, hold up, because you had traders looking at this. Okay. So that's that. But now you want to keep that line on your year chart so you know for the future that it could have a little it could do a little gap up test and then boom, blast like that. You know what I'm saying? So that's AutoZone. But AutoZone's expensive too. Do you want to pay a little over $1,000 per share for a place you go get car parts? I don't know that much about the sector. Let's go, but technically that's what you're looking at. RH, DLTR, Dollar Tree's doing the same thing. It's right in the line of a support. We got more flag styles going on in Alibaba and JD, but I'd stay away from the Chinese market with all this news. Do I set an alert to notify me on the bounce? I could, yeah, but no. I typically just jump on in the morning and look. You can create a heat map like this of a watch list and watch it like that, or you can, however your mind works and you want to watch it. If you want to set alerts that alert you, you could do that. If I set alerts on all the I'm just showing some. If I set alerts on, I'd have too much alerts all day attacking me, and it would just distract me. It doesn't work good for the way my mind works. But if that works for you, yeah. I personally, you see on my little camera, let me see here. This is typically what I use as my design. I'll show you. Let me do this. So that's what I use right here, and the news. So my middle screen here, I stay on this screen, or I go to my main chart. I watch whatever chart I'm looking at. I find something over here on the right. I look at this heat map on the left. Up at my top screen here, I keep it on the S&P 500 E-minis. During the day, if we start dropping fast, I'll actually change it up here over to like a block chart or a tick chart. And then I always want to keep the news on. And that's if I'm actually actively intraday trading. But if I'm not actively intraday trading, you can just swing in and out of trades. So what you want to do is the night before and in the morning, you just want to watch the news, and you want to look at the E-mini. Okay, let me fix all this here real quick. So you want to watch the S&P 500 E-mini, and that's going to give you your news. So tomorrow you wouldn't really want to be jumping into anything riding a support line or anything in a flag pattern like everything I'm looking at, because of the news, because of this news right here /ES E-mini. And what I'd recommend, I'm saying you all, but really trade how you want to trade. This is how I do it. Always keep news logged. So always watch the news, always keep it logged. And over years of doing this, you're going to know what kind of candles are going to be happening. You're going to know if, like right here, if I was on my computer when that news came out about that the virus is bad or whatever. Let me move this guy to here. If I got that news when this was going on here, what I would have done is I would have just zoomed into a 233 tick chart, saw how many, this is every 233 trades, the market will create a new candle. And if that was running pretty quick for at night, doing this over time, you'll know, hey, the market's moving fast or slow, or you'll know the kind of volume just by watching it. You'll know, okay, maybe I want to go into a Renko chart right here, and if it's dropping really quick like it was back here, and with that news, and then looking up here at my top screen or looking back here at the year chart, you want to know, okay, I could have jumped in and got a 3-point drop with 4 contracts at $12.50 per contract. Okay, so that would be, $12.50 times 4, and then you're making that per tick, and there's 4 ticks per point, and that'd be 4 points. You could make a couple $100 just because of the news in this drop, and that right there is going to be your hedge for your swing trade holds. So when if you invest into or swing trade into companies, and you're taking a loss on them from coronavirus news, but you're still in a nice, cup and handle or flag pattern or a pennant or an ascending triangle, or you just jumped into a nice 3 rising valley on a nice support zone throughout the year, it may struggle during it because of this coronavirus, but if your account takes a hit and you just sit in it, you should be fine. Or if you want to hedge by shorting the futures market, you can do that. So you want to look at Tesla. I haven't looked at Tesla since the drop. Ha! Tesla's looking pretty fire right now though, isn't it? Look at that. Let's go to 1 year. Let's zoom in a little more on that year. Let's go to 4 hour. I mean, it's a wet. There's not enough. So it just took this crazy jump up, the sell-off from all the people. You got to think, you had people stuck in Tesla forever. I mean, how long was it running sideways? Look at that. We're talking years of just sideways movement. So when this finally, you got people investing from here to here to even this, that finally got to this. I mean, there's people that probably didn't look at their trading account on Tesla forever, and then they sold it here. So obviously, we're going to be getting this, But I think it's still showing a lot of strength. I mean, that was all bullish, a nice sell-off day, Losing interest. Yeah, I mean, I'm thinking if you got into Tesla here and took a fall, I would say just you know, feel the pain until it does its next move. This is the thing about Tesla that everybody's got to understand. The the car or vehicle or transportation industry is ruthless, and Ford and you know, Chrysler, GMC, um, you know, Dodge. First of all, what is it? Chrysler owns Dodge, and all, you know, you got like what, 5 6 giant car companies. And if you look at the history of new companies trying to join the automobile industry, they get crushed. What was it? Saturn was the last one. They did pretty good. Tesla's the only reason they're able to do how well they've done in the automobile industry is because it's a total new deal. So it's like owning an Apple instead of owning a, you know, a Microsoft computer. It's a niche, and it's actually, he was able to finally do it. So the sky's the limit for Tesla. He's creative. He's finally starting to fit the business sense. You know, Kramer's on board with him now, which a lot of people follow Kramer with Mad Money. Tesla, I'm definitely, just because I jumped on and saw this nice little wedge here, and the candles, you know, just get tighter and tighter, I'd say look for a big move up or down here coming up. And if you put in a buy order up above, just a stop order, or if you put in just a limit order for a short down here, it might not be a bad idea, because you should be catching a big candle here coming up. What I'm going to do is I'm just going to sit out and watch it, and I'm going to wait till I start seeing a lot of, you know, market interest in Tesla again, the volume to start kicking up again, and then I'll probably jump in for the next one, because I'm definitely more bullish on Tesla than I've ever been. I wish I got in them back here. I just don't like to let money sit. For what's my advice for growing a small amount? Patience, man. I hate to say that, but everyone wants a get rich quick plan, and everyone wants to get in the stock market and do it as quick as possible. If you're just slow and steady wins the race. If you're slow and steady, you're going to protect your money the best. You're not going to see much gains, but you're going to get these movements that happen. So in blue chip with me, the latest one was Amazon. I got that big bounce because it was easy to see it coming. It was like, it's Amazon. Why has it been sideways in this huge giant wedge for so long? And if you look at a 5-year chart, this huge cup and handle. So it was a joke to me. I put on my Twitter, I said, like as a joke, I made it like Elon Musk was talking to Jeff Bezos, and it said Elon Musk was saying to Jeff Bezos, hey, I bet you can't make the biggest cup and handle. And then Jeff Bezos was saying, hold my beer. And sure enough, I made another post in December, Christmas. I said next year Amazon's going to jump, and sure enough, Amazon jumped on the earnings report. The one before that was Disney. Disney was easy because it made a huge gap up because of the the huge gap up because of them announcing that they're going to do their streaming service. And then they ran sideways for a while. And right before their streaming service came up, I told everybody get in just because the chart showed indicators. You know, the technical analysis was there. So that's just how it was played. So you'll get those big jumps in blue chips. The thing is, you want to just get in on these slower movements and build up slow. So, yeah, if you only have a $2,000, $5,000, $10,000 account and you're only able to buy a few of a company and it only goes up $1 and you make $4 here and then you make $6 here and you make $12 here and you make $3 here and you lose $7. Just really what you want to do is you want to fund. At this time, you should be working if you only have that amount of money in an account, and you should be funding it and protecting that money. Use it as a savings account, where if you make a $5 jump, who cares? Because as you get better and better and better, that $5 jump turns into a $20 jump, which turns into a $100 jump. And a millionaire is making that same $5 jump you're making, only they're able to make, buy a car with it. That's the only difference. Penny stockers are in the same business. Basically, they're losing a lot of money off a small blue chip fails until, boom, they get huge, big wins. But their accounts, if you start with a small account in penny stocks, you'll probably crush accounts unless you start with a $20,000 account and play small, little loss, little loss, little loss, little loss, big win. I've always seen penny stockers that share their accounts take way more losses, and you got to play stops. You got to play brackets way more than I got to play brackets. I typically never have a bracket order in a blue chip stock. I just buy in with a stop order, and I let it run and I watch it, and I manually exit out of trades. And I typically don't exit out of trades. I just know why the market's dropping from watching the S&P 500 and shorting the futures account, and that's how I hedge my money. But starting with a small account, it's the sooner you learn that you got to just have patience and build it slow, the sooner I think you'll gain success. And that's my style. And maybe you'll have there's a lot of people out there that'll tell you opposite, but I guarantee you they're going to try and charge you for their knowledge. And if they're so successful, why are they trying to charge you for their knowledge? They should be invested in real estate. They should own a company with over 500 employees where they don't have to pay taxes. And they need to read a few books on how to make money rather than scamming people, if you ask me. Because if you're making money in the market, if you want to charge some people because of your time or something, that's one thing. But if you're making a person pay monthly for indicators, if you want to make people pay monthly for your watch list, I don't think it's a good route. Chartmill, let me show you something here. You don't have to pay for this. You can go to Chartmill once a day. You will never have to pay for it. And if you look at it every morning before 9:30, before the market opens, it's going to show you Apple, AKAM, Visa, Facebook are all good ones to watch. They draw the lines for you, and you can even click into these companies and learn everything you want about them. I mean, this has all the information. There's FinViz, has a lot of information. All the information that you're paying for, if you're paying somebody, is information you can literally get for free. So, I mean, that's me. I don't know. I'm sure there's a lot of people that would argue that. So, yeah, JWR, picking wins is all it's about, man. First of all, that's why blue chips are so fun and in my opinion better, because first of all, you can know the company. Let's say JWR, if you're just a huge Apple fan, or if you're just a really big into let's say your wife or a female trader is really big into makeup, and she just really understands the makeup industry, or somebody really understands the alcohol industry, or let's take a look at the weed industry. That's something I didn't understand, and I lost some money in the weed industry, the marijuana industry or whatever. And I can go into a quick little let's see here. Let's go into my flex grid, and I'm going to go to weed. Okay, so here's Aurora Cannabis, APHA, what's that, Afira or whatever, CGC, what's that, Canopy Growth, Cronus Group, Hexo, and Tilray. Those are the 6 I like to watch, but you can obviously tell they're all bottoming out, and what you want to look for now is it to start to scallop back up. What we want to look for is this right now. This is the only problem. I don't think we're going to get this. what's going to cause the marijuana industry to all jump is more than likely news from the United States. If Bernie Sanders if Bernie Sanders wins the election, the S&P 500 should all go red, and the weed industry should all, gap up. We'll see. ACB got crushed because they grew too fast, and other countries don't smoke as much weed as the United States. It's really going to be based off the United States and federal legalization. If federal legalization ever happens, the marijuana industry will become a sector that is just like our information technology sector or healthcare sector or industrial sector. It should become its own industry and start booming. But if the United States doesn't federally legalize, and I don't care how strong Germany and Amsterdam and Canada push it, it'll just be a slow gainer. Yeah, that's my opinion. I don't know. Let's see here. Let's just look at a few more charts. Let's see. Yeah, the CEO backed down. I know. Terry, right? Terry Booth, I think was that his name. I'm friends with him on Twitter. Would talk to him here and there. He's a pretty cool guy. He is a good face of that company. So I was disappointed. Do I know trade reversal? What do you mean trade reversal? Like how to trade reversals? Is that what you mean? Like good reversal patterns? Or is trade reversal a person? What do you mean? But yeah, JWR24, just back to you, man. I'm going to start doing this streaming a lot. So you're going to see trades that I'm in. You're going to see my losses. You're going to see my gains. You're going to see my struggles. But my goal is to get this currently $39,577 account to $100,000 by the end of the year. So let's see. Let's see how it goes, you know. Let's have some fun. And if you didn't have any source of information, and you could just get to one website, I would honestly use Chartmill. I like Chartmill. That's just me, once again. And FinViz is great. This company right here, StockTwits. StockTwits has a lot of trash traders and, people that are not making money in the market. They're just invested in something and want to just keep pushing it because maybe they're losing money on it at the time or something like that. But StockTwits is good to just see, stocks that are on fire and maybe get some ideas. But Chartmill and FinViz are my two favorites to just maybe find good setups if you don't have like a trader that you like to trade with. So I come from a history of trading. JWR, my grandfather invested in 1970 in Walmart, and he was the one that really introduced me to the stock market. He as a kid. What's that? Pork belly, you said what times? Well, you said what times again, please? Sorry. I get on every morning at like 5:30 a.m. and then I'm probably gonna stream every night at about 7 till 8 like I am right now. I got a family and all. I stay pretty busy, but I want to get on and start helping people. It's fun. You had money in ACB. Yeah, I know it, man. We all put money in ACB. If you shorted ACB, you could have made it back. Yeah. Oh, that's cool. It's a group. Someone has a chat that involves. No, I don't know anybody. I don't know anything about that trade reversal guy, Benny. Yeah. Yeah, I stream in the morning, Pork Belly. I get it literally Eastern time at 5:30 in the morning. I know it's really early, but um, I I get up that early and get the day going, and I have time to jump on there. And all I'm gonna do, it's early in the morning. I just jump on real quick. I don't really answer questions. I just stream what I'm doing. So it could help. I think it could help you if you just want to jump on and get some ideas. But then if you get on later, it'll save as long as you got I think an Amazon Prime account. Your Twitch should be able to show you my history. I'm actually recording this whole deal here, and I'm going to put it on my YouTube channel. And the main thing is you're going to be able to, and I'll be able to, it's like a journal for me too, just keep track of this account over time. And I'm not going to take any of the futures short money and put it into this account. So the pain I'm going to feel on Apple, AMD, Walmart, and Roku tomorrow, because of this drop due to the coronavirus, will be seen. If I jump into any stocks while I feel this pain, it's more than likely. And the market, it dropped, but I'm looking up at my top screen, but there's a nice wick now. Let's listen to Asian market. Let's listen to CNBC Asia. Just see what's going on.
Of this coronavirus impact, and talking about how they're spending about $1.5 million of operating expenses.
So just jumping in real quick. I mean, boom. What's the first thing she said? Coronavirus. Anytime I could have jumped on there, and that's the whole focal point. So really keep an eye on your heat map. If the market just starts crumbling and you don't have a futures account, or you don't short, you just maybe got like a 401k investing account, you always want to have cash on hand. So I do have cash on hand for tomorrow. I only have 3,323 right now, but when tomorrow hits, this is not a margin account. So my let's see, about 15,000. Let me see. I should have I'll have $17,571 roughly tomorrow. Where what I will typically do, if the market continues to crash due to news, I'll jump on a heat map of the S&P 500, and I'll just check and see if there's a sector that goes bright green while everything else is going red, or if everything is a dull red and everything becomes a brighter red, and something else just kind of stays a mediocre red or a dark green. I'll watch that sector to see if it starts to gain in popularity as others start to drop. And if the S&P 500 is not doing me any favors, then sometimes I will jump to the Russell, or I'll look over at Dow Jones, S&P, or the NASDAQ. But typically I stay in S&P 500 and do the futures. So that's my strategy. But yeah. Yeah, there's a lot of crap. I know. The biggest struggle with trading, though, you'll notice, is emotions within yourself, trying to rush, fear of missing out. Like, who cares? If you save $5,000 in your account, in your trading account, and treat it like a savings account, it's always $5,000. You know what I mean? If you don't trade that for 10 years, then obviously that $5,000 isn't worth as much. But if you go a month without picking something, that's okay, you know. Just watch the market and write down, hey, I would have jumped in with 2,000 of my money right here, and then watch it. Oh, that would have been a good choice. Or trade a paper account. And when you feel real bullish on a company you've been watching a while, and it builds a nice setup for you, jump in. You know, jump into a company that if your setup or your trade fails, you don't mind holding on to that company. And base that off of your gut on the feeling. what you know about the company, news related to the company, and look at a 10-year chart, look at a 5-year chart. And unless you're a penny stocker, you don't want to jump into something that's just completely crumbling forever and then has these weird little news gap ups and stuff. You know what I mean? You want to trade more of just overall momentum, and you want to trade as a swing trader, because investors feel pain more in their overall investments, and they're not able to take their money and make it work for them as fast as if you swing in and out using technical analysis. That's proven for me for years. So and all kinds of market changes. Literally, you can go through a year where the whole market is just falling. You can go through a year where the whole market's sideways. You can go through a year where the market's just rocketing like it is now. And you got to learn how to differently trade it. And you got to learn how you visually see the market. I'm not a mathematician. I'm not a good numbers guy. So I like to chart off of we went over bullish patterns today. We can do bearish patterns for shorts or looking when to get out. You want to look for, a bearish pattern. Or, of course, you can use the MACD or the RSI, stuff like that. And then reversal patterns, we can go over that type of stuff. But that's all things you can Google. And use websites like Chartmill. Again, I'll just jump to that real quick. Let me... Now, Chartmill typically at about 8 o'clock, like right now, to 9 o'clock. Okay, see, a few seconds ago, it'll tell you. A few seconds ago, these were posted, so probably 8 o'clock, I don't know. But Apple, AKAM, Visa, and Facebook are all good setups. I got out of Visa today because although it's a good technical setup, the dividend is you would have had to buy into the X dividend the day before. The X dividend is tomorrow. So literally tomorrow people will sell the stock first thing in the morning just to keep their the X dividend money, that the dividend that they'll be getting later on. So I like to jump in. So I played Visa by the bottom here of this flag, just by this overall line. And then I sold today up near the top. I think I actually caught it right at the top. So Facebook is looking good because it's at one of the support lines. But yeah, and then in the morning when you get up before you trade, jump on Chartmill. They usually put some more on in the morning, and then that's it. If you really use the crap out of this, you can pay, I don't know what it is, like $200 a year or something like that. And there's a lot of information you can get from Chartmill. Let's just go to like Amazon, and you can get the profile overall of the company. It puts twits right in there from stock twits. You can go over to the stock chart. It's got a really clean, nice looking, just basic chart here. You can click into it, and actually they got all different types of indicators and studies. You can go into their technical analysis and they break it down, fundamentals where they break it down. I just think it's a really good website. But I'm going to jump off and spend some time with the kids, get them to bed. So I'll be on again tomorrow morning. I'll be on again tomorrow night. And everybody have a good night and good luck tomorrow. Let's just real quick go back to the ES right before I log out. And as you can see, we got a nice wick. So at least the market didn't just keep dropping down to this now support zone. So just keep an eye on that in the morning. That's this old all-time high here. As you can see, it came back up, touched it again, had some action on that line, and now we got up away from it. So if we stay bearish, pay attention to this line. If we hug this line, we could then move back up unless this gets worse, the virus news. All right, everybody have a good night. Yeah, no problem. You know, I appreciate that people are getting something out of this, so I'm gonna continue to do it. You know, take care.